Good evening. Ira Epstein on Saturday, November 7th, 2020, just getting on to 6 p.m. with your financial market weekly wrap-up, and this is for November 7th, 2020. Well, by now you know that we have a new president-elect, and that is Joe Biden, and Ms. Harris obviously is the VP. It should be a radical departure from how the prior administration was handling us on the world stage. We will see if it's better, if it's worse, what it means, how long it gets to be in place. There'll be a complete change of the cabinet, as you know, the way the government is run, and now the market has to digest what this means. A lot of that's been done already. I think the market by midweek had already built in a Joe Biden win. So now the question is, what's the next stages that the market wants to do? I'm of the opinion that it means more spending. I'm of the opinion it means a COVID bill. The opposite's going to happen. You're going to see the Senate change place with the House, in that the Senate will be the one stopping bills from going through that it thinks are just too radical, too large in size. We already saw today Larry Kudlow speaking for the White House saying that a $2.4 trillion bill not necessary when unemployment fell again this past Friday in the non-farm numbers. Can't argue those facts. Had we not had COVID-19, maybe a different outcome, maybe everything different. You don't know, but we have COVID. We haven't resolved COVID. So let's go to the marketplace and talk. 3,500.75, a new high close over the 34.99. So the market has finally done it. Now, I've been looking, as you know, for a Santa Claus rally. I've been very, very much talking, and no, November 7th doesn't start a Santa Claus rally. But the market had a correction, and now the market's already gone back up. Even if one were to fall back and get back under this close of 32.6475, the fundamentals are so different right now with the new presidency that I would look for big support at that 18-week average. I'm not saying you're going there, not even implying it, by the way. When I take a look at what the market's done on the weekly chart, remember, this is the monthly of only closes. Very different. This is the weekly, and we're going to stay with weeklies the rest of the way. You had a market that got this low, if we take a look at a 32.25, taking out the break low here. And now you've gone into one of these vertical ascents. The settlement price was the highest that we've had on the chart. So on a weekly basis, the market is through with the correction. And do you notice the zone that the market corrected to? It's that 18-week average of closes. I had told you repeatedly that I thought that a certain type of trader, the moving average trader that hasn't seen a 100-week average hit in a long time, a 200-week, they step in and buy those the first time they're hit when the market's been above the markets for a while. Not when the market's been above the market for, say, a month or so. I'm talking a while. The idea there is you're looking to see, does the market find its major support there, or does the old support become a top if it slices through it? So far, it's acting like it was support. When we come to the weekly bar, it's certainly not a new high. I'd like to see that wait for Christmas time. I don't know if I'll be able to have the market do that, because I do believe a Santa Claus rally is coming, and the question is, does the market get that and get itself too over anxious to the upside? Why do I think up? Because I think the new presidency is going to bring with it more spending. I think the world is spending to begin with, and now I think we're going to get more spending. And I think now that this phase of the presidency gets behind us and a new phase comes in, we turn ourselves for 4 years back to the economy. And the economy, as the Fed said on Wednesday, needs fiscal help from the government. But conversation will not be listened to. It's going to be listened to. When we take a look at where the market's at for the week, we did not take out this prior high. That was 35.41, 35.22s here, but you certainly have the pattern of higher lows, higher highs. That's bullish. The market held in this whole pattern here, the 18-week moving average of closes back in, if you'll recall, all these months the market had hit those averages. Once it got over them, and this is what I'm talking about on moving averages, when you finally come back, and we hadn't been back to these averages since May. When we got here, I told you I think the long-term bulls will be buying. They did it again 2 weeks ago and this week. I said the same thing. It's a natural pattern that I've seen as a student of moving averages for 5 decades. So I watch them, I learn from them. Now, what would be ugly on the chart? No ifs, ands, or buts are getting under 32.25. That could give you an idea, hey, this market's way overdone. Why is it giving that up? That would be my warn sign, but I'm not seeing that at this point. What I am seeing is resistance possibility at the 35.52 level, the upper Bollinger Band. We could see that hit this week as the market gets euphoric on the naming of the president-elect. The markets like that. They like certainty, so it wouldn't be surprising to me if the market makes its run at that number. And I know traders will say, when it gets over it, it's going to keep running. Folks, you only stay over these numbers 5% of the time. You have to have ice in your vein. You cannot let the emotion carry you away. That is where I think a first level of profit taking is waiting in the market. Profit taking is a lot different than going short. Momentum in the market is just turning up. It has been floating. I would expect it to turn up this week now that we have certainty into what's going on. I understand they're building the stages already outside of the Capitol, getting ready for the January inauguration, which is going to be a lot different. You're not going to get all those tens of thousands of people. I don't see how with COVID, and especially under a Biden regime where he has been very, very adamant about wearing the masks, social distancing, so not quite certain how this is going to look. As I look at the market, it's going to fight a battle, I think, right up there, trend up, support back at 33.52. In the NASDAQ, you're already knocking on the door of the upper Bollinger Band, but you've had a strange pattern. You've had a pattern of lower highs, and now with the outside week up, higher lows. So if the market can take out the 12,249 level, what happens is you confirm everything. You're right into the resistance already. You got up this week to 12,119. 12,169 is the upper Bollinger Band. So I'm looking for the market to probe that. And I look for big support on pullbacks to the 11,280 level, the weekly 18-week average of closes. It's already been attacked 3 times. Each time I was telling traders that's where I think the pros are buying on the weekly charts. And I think that they would take some money on the first challenge of the Bollinger Band. You don't have to believe me in the sense that they'll do that. I don't know, but I'm thinking they will. The Dow is the one that hasn't got a trend. It's got a higher high, lower low. Now, it too has given you opportunities to buy that 100-week average in addition to the 18. It has paid off in the past. There's no reason it shouldn't now, but I don't see a trend. There's a lower low and a higher high. What hurt this market is the fact that under a Trump win, you would still keep the big techs going. Under a Biden win, now the question is, do we get a bit of rotation? This market didn't know which way to go with all that. So now the question is, what is it going to do? I think a Biden win attacks, as you know, the big techs. I want to make that clear. And it'll put a bid back into some of these rotationals. We'll see if I'm right or wrong. By the way, he won't have the power to get that through the Senate in the way that he did, so everything gets toned down, and that's so important. A blue wave would have been a very different event than the wave that we've got. Can the Senate still go Democratic? I don't think so. I think it can go neutral, but I really think it'll stay in the Republican control by very little, which means that you need every vote to get things barred or passed. In the Russell, the small caps like what they've seen. Again, this buying happened, as I said, and I'm going to repeat. I think that when you get to that 18-week, the first challenge of an upper Bollinger Band is where pros take some money off the table. In the 30-year bond, you had an outside week to the upside. Do you see that? So until this low is taken out, because it's an up week, the market now has a lower low and a higher high. It has stepped out of that trend. What about what's going on here? Both numbers were under 20 in the slow stochastic. They were under 20 on the week before, and the week before they were under 20. You have what's called an embedded reading. You'll have a really good idea that this market has made a trading bottom if you lose the embedded reading with the red getting on a close over 20. Until that happens, even though you've lost the swing line and you've run the lower Bollinger Band, the bears control the market still. You need that to happen. Without it, they're probably waiting to sell this market on rallies until that reading is gone. 10-year note, oversold condition, outside week up, different than the bonds. I think this market is saying until this week's low is taken out without the embedded reading, the bears have now, it's not as though they had the control, you were oversold, but the market had fallen into the support of the Bollinger Band. Look at how narrow these ranges are. This is a 2-point range in the Bollinger Band. It's not that it's out of scale. It's a very, very narrow range. I think that we can now look for more good to happen in terms of fiscal spending. Will that want to put pressure on this market, or will the Fed balance it out? That's what the market has to see. We'll find out very quickly. In the dollar, the market had an outside week to the downside. The battleground has been for 2 weeks. Right here, you can see them, the 18-week average of closes. Literally, since back here in May, the market has tried its darn best to stay under that number. It's done a very good job of it. I think the bears have control of the market, but it's not a trend. This is just a broad move to the downside. Momentum's pointing down. 91.41 could be the downside target. I'd love to see more battle a little bit higher. I ultimately think the dollar's going down, the euro's going up. On the euro, you got to the 190.05 area, so you took this high out. So you have a huge outside week up. The battleground, the flip-flop, it's a mirror. There's just different flips on it. And this fought its battle also right here. If it can rally more, just over the 120.50 area should be the resistance. Canadian dollar. I think currencies are going to say, maybe trade wars with America coming to an end. And if that is the case, they'll open the barriers, and I think you're going to see a number of currencies jump on this now. Higher lows, higher highs, bullish. Momentum still up, target 77.20. Japanese yen up and away. Even the Nikki's up and away on these markets. Overbought. Do you buy over a Bollinger Band? Well, I can tell you what I teach. I teach never, with a capital N, capital E, right on down the road. Why? That's often too euphoric and the market pulls back into the bands. Am I bullish? Absolutely. I'd wait for better opportunities. Bitcoin, I remain in the bull camp in this. Been telling you on the daily charts, I think it's good. It's one of the best asset classes of this year. It still has no real value other than speculation, and I don't think it's going to change that anytime soon. When we get digital currencies, they will come from central banks. Will they come? You can count on it. This, a whole different type of vehicle. When we come to the differential between the Brent and the WTI, well, seeing what's going on doesn't help the demand for crude oil right away. I think you'd agree with that, whether we had a President Trump or going to get a President-elect Biden now. That's not the key. It's getting rid of COVID. So you've got to look for cracks in the armor there. You've got to look for OPEC to follow through and say, no, we are not going to produce more oil while this is all going on. The negative is Baker Hughes says in the U.S. we put out, I think it was 5 more or 6 more wells for the crude oil. We lost one in offshore and we lost one in nat gas, but we put on more wells again. When you come to the Brent prices, let's get it here. You've hit the lower band. You tried a downside breakout of sideways action. You had a failure on Friday. You needed another close down lower in the bottom quadrant. Didn't get it. The trend is certainly to the downside. You are oversold. Resistance 42.38, taking out 43.60 on a weekly chart will break the downtrend. I still expect the bears are in control of this market. Same thing could be said of the WTI. Not really. You have a higher high in a lower low. There is no trend. You've tried the downside on this one, just like you did in the Brent rather, to the lower Bollinger Bands. Look for resistance at the 18-week. I'd like to see the market do more than this. Gasoline, same thing. Went down to the lower Bollinger Bands, oversold. I look for this market to start biting and trying to find its support. Keep in the back of your mind why these are all down. As COVID breaks out in countries around the world, people aren't getting in their car and doing their normal things. It's going to be less and less. We'll be staying home more and more. Lockdowns in Europe hurting gasoline demand. In the U.S., do you think that people are everywhere? We don't have any restaurants open in Chicago. There's nowhere you can go to a bar, a pub, or anything. That's all done. The places that were outside, remember what I told you. We're in the Midwest, going to be really cold next week. We had record-breaking warmth this week. We've been every day 70s. Chicago today, November 7th, 75. Breaks a record from 1915. They say we'll break one tomorrow. They also say we're going from the 70s to the 40s next Wednesday. Normal weather. What do you do then, especially as we're hitting record amount of cases in Illinois? The governor's doing his best to not close factories and so on, and I don't think he will, but people aren't going anywhere, and that's going to be the real difficulty. You can go to the drugstore, you can go to the food and get your food. People aren't really shopping much right now. So these are the problems that you have for the other parts. So I put it all together, try to come up with ideas, and every morning, and I'm talking mornings from Monday through Saturday, I put out a morning video for you. Now, my Monday through Friday ones I record at 5:40 in the morning. I'm now recording the weekend video, typically like I did today and Saturday mornings, getting them out to the traders so they can get ideas of short-term, swing trades, longer-term trade. Monday through Friday, I use daily charts. On the weekend, I go to all weekend charts for everything that I cover. The idea is there to give you the longer term look. You don't have to look at a weekly chart every day. The way to look at them is from really the close of business Friday to the next Friday. That's what we do. Included is our mobile application in my subscription. You're able to look at it on your phone. I send you a push notification. You can see my videos, my written updates, whatever subscription you've decided to take. I cover in the morning for you both the fundamentals in all these markets in this sequence, the exact sequence you're seeing, and believe me, I'm not bashful. I throw out a lot of trade recommendations. The idea, use me as a sounding board. What does he think on the markets? That might be what I want to do. $7.95 for 30 days. Now, out of those 30 days, let's assume a 30-day month, 26 have a video recording. Not a bad deal. I don't think you're getting that anywhere else. The typical recording's 20 minutes long. There's a lot of effort put into these. How do you find out more and sign up? Go to our website, www.iraepstein.com. Under the word research, it's all there. If you'd like to learn my charting technique, it's under education on our website. I'm Ira. You have a great weekend. I will see you all Monday.